Right now, investing for income is really difficult. The Federal Reserve has kept interest rates at zero since the coronavirus pandemic, leading to lower yields in fixed income. Stocks aren't much better, as record high share prices have reduced the average dividend yield of the S&P 500 index to just 1.3%. But what if there was a way that you as an investor could find quality stocks with dividend yields over 5%? Well, folks, in this video, I'm going to cover 19 high dividend stocks that you can look at today, and all of them are paying over 5%. And at the bottom of the video, I'm going to give you the ticker, the dividend yield, PE ratio, and market cap so you can follow along. But before I begin, this video is brought to you by Dividend. Dividend helps investors like you and me find high-quality income securities for their retirement and financial freedom portfolios. And the Dividend newsletter analyzes their top 10 high-quality dividend growth stocks each and every month. Now stay tuned, because I'm going to be giving you a coupon code for a nice discount. Alright, so let's get started with the first high dividend stock on the list, Chevron Corporation. Chevron is a well-known dividend growth stock, as it's on the prestigious Dividend Aristocrats list. The company has increased its dividend for over 30 years in a row. Now, Chevron is an integrated super major with a large upstream exploration and production and downstream refining and marketing segments. Now, you might be wondering what a super major is, and it's a term given for the 6 largest oil companies in the US. In the second quarter of 2021, Chevron grew its production 4.6% over the prior year's quarter. The average realized price of oil of Chevron essentially tripled over last year's quarter, and thus Chevron went from an adjusted loss of $1.56 a share to an adjusted profit of $1.71 per share. Thanks to the strong recovery of oil prices and the improved outlook for refining margins, Chevron raised its dividend by 3.9% this year. Now, high dividend stock number 2 on the list is Altria Group, a legendary dividend stock. It has increased its dividend for over 50 years, making the stock a dividend king. The company manufactures tobacco products, including the Marlboro cigarette brand in the US, as well as chewing tobacco and cigars. Now, since there's been declining smoking rates in the US, Altria has invested heavily in other categories for growth. For example, Altria purchased a 55% equity stake in Canadian marijuana producer Cronos Group, invested $13 billion for a 35% equity stake in the e-vapor manufacturer Juul Labs, and the company owns a 10% stake of Anheuser-Busch. Altria will also continue to expand its own heated tobacco products, IQOS and Marlboro HeatSticks, in 2021. Number 3 on the list of high dividend stocks is Exxon Mobil, a dividend aristocrat and a global energy super major, just like Chevron. In the second quarter, Exxon's production in the Permian grew 34% over last year's quarter, but total production dipped 2% due to maintenance activity. However, the chemical segment posted a record earnings of $2.3 billion due to high margins. In addition, the upstream segment did well thanks to the rally of the oil prices, which resulted in deep production cuts of OPEC and Russia, and from the recovery of the pandemic. As a result, Exxon went from an adjusted loss of 70% a share in the last year's quarter to an adjusted profit of $1.10 per share. High dividend stock number 4 on the list is AT&T, a telecom giant with a 7.4% dividend yield. Their core communications segment provides mobile, broadband, and video to 100 million US consumers and 3 million businesses. In the second quarter 2021, AT&T reported 7% growth in revenue and adjusted earnings per share. AT&T also announced a deal to combine Warner Media with Discovery to create a new global entertainment company. AT&T will receive $40 billion in combination of cash, securities, and retention of debt. And this should allow AT&T to simplify its operations, become more efficient, and return to its core focus of telecom services, such as the 5G rollout. Now, number 5 on the list of high dividend stocks is Enterprise Products Partners, a premier MLP with a huge network of services that includes 50,000 miles of natural gas liquids, crude oil, and refined products pipelines. Now, if you're not sure what an MLP is, here's a video that you can check out all about them. Now, Enterprise Products also has a storage capacity of more than 250 million barrels. And in the second quarter of 2021, distributable cash flow covered the distribution by 1.6x. Additionally, volumes experienced 5% growth year over year. Enterprise Product Partners is one of the safest midstream MLPs. It has credit ratings of BBB+ from Standard & Poor's and Baa1 from Moody's, and a modest leverage ratio of just 3.24x in the trailing 12 months. Not only that, the company has increased distribution to unit holders for over 22 years. Next on the list of high dividend stocks is another master limited partnership, MPLX. MPLX was formed by Marathon Petroleum Corporation in 2012, and the business operates in 2 segments. Logistics and storage, which relates to crude oil and refined petroleum products, and gathering and processing, which relates to natural gas and natural gas liquids. In the second quarter of 2021, adjusted EBITDA rose 12%, while distributable cash flow increased 22%. The company is also a rare MLP in that it has an active share buyback program. For example, MPLX repurchased $155 million of its own shares in the second quarter alone. Now, high dividend stock number 7 on the list is British American Tobacco, one of the world's largest tobacco companies. British American Tobacco owns many tobacco brands, including Kool, Benson & Hedges, Dunhill, Kent, and Lucky Strike. In the first half of 2021, BTI's adjusted revenue and adjusted earnings per share increased 8.1% and 6.1% respectively. Combustible product revenue increased 5.8%, while growth in new category segments, including vapor and heated tobacco, increased 50% in constant currencies. For the full year, BTI expects full-year constant currency revenue growth above 5%, along with mid-single-digit adjusted earnings per share growth, due largely to growth in new categories. This should help protect the dividend, which now yields nearly 8%. Folks, if you think 8% is a good dividend, give me a like on this video. Number 8 on the list of high dividend stocks is WP Carey. WP Carey is a commercial REIT that operates 2 segments: real estate ownership and investment management. The REIT operates more than 1,200 single-tenant properties on a net lease basis across the US and Europe. Its asset management business has assets under management of approximately $2.8 billion. In the second quarter 2021, total revenue increased 10% to $320 million, and adjusted earnings per share increased 11% to $1.27. Magellan Midstream is number 9 on the list of high dividend stocks and an MLP with the longest pipeline system of refined products, which is linked to nearly half of the total US refining capacity. Magellan Midstream has a fee-based model, as only about 10% of its operating income depends on commodity prices. Distributable cash increased 28% last quarter, and MMP has more than $500 million of potential growth projects under consideration. MMP also has a strong coverage with a DCF coverage ratio of 1.17x expected for 2021, and a solid balance sheet with an investment-grade credit rating of BBB+ from Standard & Poor's and a debt-to-EBITDA ratio of 3.75x as of the end of the first quarter 2021. Now, folks, before I get to number 10 on the list, it's that time again. Remember that promo code I mentioned earlier for the Sure Dividend newsletter? Well, because you're watching this video, you can go ahead and use my coupon code, FIM41OFF, to go ahead and lock in savings of $41 a year and get instant access to the newsletter with a 7-day free trial. I also left a link in the description below. Alright folks, so high dividend stock number 10 on the list is Universal Corporation, the world's largest leaf tobacco exporter and importer. It's the wholesale purchaser and processor of tobacco that operates between farms and the companies that manufacture cigarettes, pipe tobacco, and cigars. In the most recent fiscal quarter, revenue declined 2% due to lower tobacco volumes, but adjusted earnings per share jumped 36%. The company is shifting its business model to include the processing of produce to diversify. For example, Universal acquired Fruit Smart, an independent specialty fruit and vegetable ingredient processor. It also acquired Silva International, a dehydrated vegetable, fruit, and herb processing company. Universal Corporation is also a member of the exclusive Dividend Kings list due to its 50 years of annual dividend increases. And by the way, if you want to know more about Dividend Kings, check out this video. Next on the list of high dividend stocks, we have Omega Healthcare Investors, one of the premier skilled nursing-focused healthcare REITs. It also generates about 20% of its annual revenue from senior housing developments. Its current portfolio includes over 950 properties in the US and United Kingdom. Omega is a major beneficiary of the aging US population, a huge trend that'll result in higher demand for healthcare facilities moving forward. Omega recently reported second quarter results which showed resilience in the face of the coronavirus pandemic. For example, Omega collected over 99% of contractual rent and mortgage payments in the quarter. High dividend stock number 12 on the list is Sunoco Limited Partners, a master limited partnership currently yielding over 9%. Sunoco distributes fuel products through its wholesale and retail business units. The wholesale unit purchases fuel products from refiners and sells those products to its own and independently owned dealers. They're also the largest fuel distributor in the US, but also operate a small number of retail stores and a terminal facility in Hawaii, which I've actually seen before. In the second quarter of 2021, net income of $166 million increased 5% year over year, while adjusted EBITDA increased 10.4%. Sunoco also had a distribution coverage ratio of 1.67x in the most recent quarter and 1.41x in the trailing 4 quarters, more than enough to cover their current dividend. Number 13 on the list is Enbridge, a midstream oil and gas company headquartered in Canada and operates in 4 segments: liquids pipelines, gas transmission, gas distribution, and green power. The company transports approximately 25% of North America's crude oil and 20% of the natural gas consumed in the United States. Enbridge has grown its dividend in Canadian dollars for 26 consecutive years at an average annual rate of 10%. In the second quarter of 2021, revenue soared to 47% due to higher commodity prices. Adjusted EBITDA of 3.3 billion Canadian dollars was flat for the quarter. Main Street Corporation is another high dividend stock and is number 14 on the list. Main Street is a business development company, or a BDC. And it's especially appealing for income investors as it has a high dividend yield, and it's also a monthly dividend stock. The company operates as a debt and equity investor for lower middle market companies, those with 10 to 150 million of annual revenues, seeking to transform their capital structures. This BDC has the capability to invest in both debt and equity. Main Street Capital Corporation also invests in private debt of middle market companies and has an asset management advisory. Main Street has never reduced its monthly dividend payout since its 2007 IPO, and it's raised its dividend over 80% since it went public. Alright, so high dividend stock number 15 on the list is PPL Corporation, or Pennsylvania Power and Light. PPL owns and distributes power to more than 10 million people in the United States and United Kingdom. They're the parent company of 7 regulated utility companies and provide electricity to customers in Pennsylvania, Kentucky, Virginia, and Tennessee. PPL also delivers natural gas to customers in Kentucky. Also, about 7.8 million of the company's customers are located in the United Kingdom. Now, on June 14th, PPL closed the previously announced sale of its UK business to National Grid plc in a transaction worth about $10.7 billion. Also, the company expects to repurchase up to $3 billion worth of its shares, including $500 million worth by the end of this year. B&G Foods is number 16 on the list and a notable outlier among consumer staple stocks, as it has a 6.4% dividend yield, which towers above its peer group. It's a consumer staple company with operations in the US, Canada, and Puerto Rico. Some of the company's well-known brands include Green Giant, Cream of Wheat, Carey's, Ortega, Mrs. Dash, and Maple Grove Farms, with 50-plus brands in total. On December 1st, 2020, B&G Foods completed the acquisition of Crisco. The company's product portfolio focuses on shelf-stable, frozen, and snack brands. In the most recent quarter, the company recorded revenue of $464.4 million, which was actually a 9.4% decrease compared to Q2 in 2020, as the company had abnormally strong results from the pantry stocking at the beginning of the COVID-19 pandemic. Alright, so high dividend stock number 17 on the list is Canadian Utilities Limited, a utility with about $20 billion in assets. The company is a diversified global energy infrastructure corporation, delivering solutions in electricity, pipelines, liquid and retail energy, with the utility segment making up the bulk of its earnings. Canadian Utilities has increased its dividend for 49 years in its home currency, which, according to the company, is the longest track record of annual dividend increases for any publicly traded company in Canada. Hey, cool. Canadian Utilities' competitive advantage is that it's a regulated utility. Due to the barriers to entry, regulated utilities enjoy a market with little threat of competition. And despite multiple recessions, the company has withstood each and every one of them, all with raising its dividend. All right, folks, number 18 on the list of high dividend stocks is Iron Mountain. Iron Mountain is a storage and information management REIT. Its services include record management, destruction, fulfillment services, data protection and recovery, server and computer backup services, and the safeguarding of electronic and physical media. Management updated and increased its guidance for this year's adjusted funds from operations, or AFO, to a range of $3.28 to $3.45, which would be a meaningful improvement versus what the company generated in 2020. Iron Mountain's focus on secure data storage is its competitive advantage. Iron Mountain has clients in the US and internationally and plans to expand its international operations even further. Now, folks, last on the list of 19 high dividend stocks is SL Green. SL Green is a commercial REIT and Manhattan's largest office landlord, as it currently has an interest in 77 buildings totaling 35 million square feet. Now, SL Green was significantly impacted by the coronavirus pandemic since folks were working from home. SL Green was significantly impacted by the coronavirus pandemic since folks are working from home. But there's signs of recovery emerging when it comes to Manhattan office and retail real estate. SL Green benefits from reliable growth in rental rates in one of the most popular commercial areas in the world, Manhattan. And the REIT pursues growth by acquiring attractive properties and raising rental rates in its existing properties. It also signs multi-year contracts, like those 7 to 15 years with its tenants, in order to secure reliable cash flows. So what do you think of this list? Do you own any of these high dividend stocks, or are you thinking about it? Let me know in the comments below. In the meantime, thank you so much for watching, and I'll see you in another video.